Today we're going to look at the top 5 stocks for May. The Motley Fool recently published this article in May 2017 about these 5 stocks here, and we're going to take a look at them and see what they're all about. So we have NTES and BOFL, UA for Under Armour, we have AZO for AutoZone, and we have AOBC for American Outdoor Brands Corporation. So then I'm just going to copy these, and to analyze I use the Beat the Market Analyzer, and at the end I'll show you how you can use this for free. So I just paste those in here. If you want, you can add a margin of safety. There's already a margin of safety built into it anyways though. Okay, so quickly it analyzes them and it comes up with NetEase is a good company at a bargain price. American Outdoor Brands Corporation lacks ability to maintain price and or recover during economic downturn. AutoZone has a good company rating, the company rating is too low right now. And Under Armour doesn't have enough stock data or history is too short. So out of these, let's take a look at NetEase and see if it's something that we might be interested in buying. Okay, you see the company rating is 91 out of 100, so very good. I also want to mention the price here. The price is $292.35, and that's what the analyzer recommends, that you buy it at that price or less. Okay, looking at the company ratings, excellent ratings across the board for the price per share over the last 10 years, the return on equity, the earnings, excellent, 16 out of 16, ability to recover from a market crash or downturn, so 15 out of 15, return on invested capital, excellent, gross margin percent is also a perfect score, and it has some growth potential as well. And there's your total score, and we can click here to get more information about each of those categories broken down. It gives you the price over the last 10 years and how it's been trending up from 2008 up to 2017. The earnings, what we're looking for with earnings is the earnings to be consistent and climbing or increasing over the years. So we have from 2007, it's going up, going up, going up, going up, 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 up. The earnings look excellent here. They're increasing and increasing pretty significantly and consistently. Market recovery, so got 15 out of 15 points for that. Also return on equity, we can see here that the return on equity is also very good. If you need information about return on equity, it says that it should have 16% or more over a 5-year period, and NetEase does. Return on invested capital should be 16% or more over a 5-year period, and also NetEase looks great here. And also you want to look for it to be consistent and if possible increasing, and since 2014 it has been increasing. Gross margin percent, excellent numbers there. Looking at 30 or over is good, so we're good with all those. And the PEG ratio, this gives you the average, gives you points out of 12, and it gets 3.36. And to have a company with great fundamentals like this and also potential for some more growth, it is very good. Okay, so let's go back and check out the stock value. So here it gives us some intrinsic value of the stock, 1,622, and depending on what technique you use, it could give you various range of intrinsic value. So looking at the intrinsic values here, price earnings model gives you 1,660. Residual income intrinsic value is 131. and discounted cash flow intrinsic value is 3,000. So you can see huge range here. Residual income can actually be a lot different depending on whether the company has a lot of economic goodwill, and NetEase probably has a lot of economic goodwill, and if they were never acquired, then you wouldn't see this represented in their value, which might be the case here. That's why this one is probably lower than the other ones here. So anyways, this one is probably the outlier. Okay, and you can click on these to get more information about each one. Buffett valuation comparison. So this says that according to Buffett's valuation comparison that you could expect around 30% growth with this stock. Okay, you can see here the differences between the 52-week low and high and the midpoint. And so now we're at 292, and you can see we're 44%, almost 45% off of the 52-week low price. So we're somewhere actually closer to the 52-week high here, if it's at 308 and we're at 292 right now. Here's the MISC fundamentals. So all of these are good. If there were any problems, it would show up in red here, but it looks like everything is good here. Looks like it has no debt, NetEase, which is excellent. It pays a dividend of 1.24. Current ratio is good, and also PE ratio is good. Ideally, we'd try to get something less than 16, but right now it's at 20.4. And we could set our price to buy this lower than that recommended price. So that would put us, we could put it under 16 if we get a price that's low enough to buy at. Okay, so looks like NetEase might be a very good company to buy. You might want to do your own research and figure out if it's a good company for you to buy. And I definitely recommend that you should know something about the company before you buy it, and you should know what affects the companies. So this Beat the Market Analyzer also provides a qualitative analysis checklist. So you could click on this and create a new checklist. And there's also a tutorial video here about it. And it asks you specific questions about that company. And this is Grant with Beat the Market Analyzer. Today I'm going to show you how to use the qualitative analysis checklist. So this is Let me just pause this. So it asks you specific questions about that company, and then you'll answer yes or no, and you can put notes. And at the end, this will tell you whether it thinks that you should buy this stock or not, whether it recommends it for you. Okay, so hope you enjoyed this video, and check out the BTMA Stock Analyzer to analyze stocks quickly and find out what are the best stocks to buy at bargain prices today. Have a great day.